Well, today it's going to be after the close of the market instead of after the bell. I think in future mornings, while I'm in the islands, I think it'll be earlier than this, but at least today, this is what you're going to get. So, and by the way, there wasn't really anything going on with Tesla today anyway, other than a great day in the market where Tesla was up over 3%. So let's take a look at what little news I was able to find for you today, and that is from the street. Piper Sandler analyst Alexander Potter and his team don't think FSD version 13 is advanced enough to handle the challenge. This is from the street, you see, because the street pays no attention to whether the content that they have is valuable or useful or makes any sense at all, but they just go ahead and publish it. Piper Sandler has an overweight rating on Tesla, and FSD is the largest contributor to the company's long-term $400 price target, according to Tuesday's note. Despite this bullish outlook, the firm says that FSD version 13 cannot support truly autonomous vehicles without human control. It's come to this conclusion after a recent call with Elias Martinez, the creator of the FSD community tracker, which monitors FSD's progress. Tesla hasn't had a public update to version 13 since it debuted nearly 5 months ago. Piper Sandler speculates that the company has been focusing on making the Austin launch a success during that time. Anyway, if you can make any sense out of what just went on there from the street, then you let me know in the comments below. I found it to be ridiculous, dumb, makes no sense. Tesla would not be putting this product on the street unless they believe it's 100% ready to go. I'm pretty sure we can all agree on that, but if you don't, let me know. We are down to only 3 weeks roughly until we're going to see what happens in Austin. My guess is going to be fabuloso. All right, this is Randy Kirk coming to you from the gorgeous countryside area of the big island of Hawaii. I will be here in the islands for the next 4 weeks, and so you'll get this beautiful background instead of my living room. So please hit like, please hit subscribe, please hit notify, and then join Patreon. That would be extremely helpful. All right, what did Chairman Powell say yesterday? This is very important. This is way more important than whatever news we could have had for Tesla today. I mean, sure, Tesla could have something really breakthrough, but this is important. Both of the articles I've got for you right now are super important. Please pay attention to these. What did Chairman Powell say yesterday? And what didn't he say? I read all kinds of analysis of the Fed chair's statements yesterday, and I don't know. You let me know again. Let me know in the comments. I think that I nailed it. That's just me. Number one, he said that there's a lot of uncertainty. Oh, really? But there's always uncertainty. I want to go back and look at all 2,000 plus videos that I've done so far for you guys. And I want to see how many times I said, man, market's uncertain right now. It's uncertain because, well, prices are going up, but maybe they're stabilizing, but maybe they're not. And is good news bad news? There's bad news, good news. There's always uncertainty, Chair Powell. I don't think that's a good way for you to lead, is to say the very first thing out of your mouth is, well, there's a lot of uncertainty right now. No, we're not looking to you for what's uncertain. We're looking to you for what you can gather from what is known. And also project based on your intelligence, your wisdom, your years and years and years of study. Number two, he said that there was an increased risk of inflation, or at least transitory price increases from tariffs. So, number one, he acknowledged that these would be price increases, not inflation, although there's a little tiny minuscule thought I agree with. That is that if you have price increases, substantial price increases, sometimes that can generate something that echoes through the entire system, and that could be called inflation. It might reduce productivity. It might cause the U.S. government to spend more money. There's little tiny bits of things, but basically, no, it's a price increase. That's good for him to acknowledge that, although he didn't really go into much detail about it because he and others commonly just say, well, the tariffs are going to cause inflation. It's not true. Number three, he said there was an increased risk of, oh, by the way, there's also an increased risk of no inflation. In fact, there's probably a greater chance of no inflation. Number three, he said there was an increased risk of job losses due to a slowing economy if tariffs impact purchasing decisions. This is absolutely true. There's an increased chance of job losses because of Doge. There's an increased chance of job losses because of AI. Most of the job losses that I'm looking at right now, the headlines that are coming out, are job losses due to the AI. There's increased chance of job losses due to all kinds of impacts of things that have nothing to do with the tariffs. But I think it's okay for him to add that. I just don't think it should have been the headline. Number four, he based a huge amount of his worries on sentiment polls and then actually said this out loud, that these sentiment polls have turned out to be very, very, very incorrect in the past. You're only talking about what the people are saying, what they're being polled on. Oh, are you worried about the economy right now? Well, yeah, I'm worried about the economy right now because these tariffs. Why? Because I'm reading about it every day in the headlines, because the mainstream press wants to scare the people into not giving Trump good years in office. I think we can all agree on that. Mainstream media wants Trump to fail. The Democrats in Congress and in the Senate want the Trump administration to fail. They don't care what impact that has on you and me. They want failure, and they're proving it day in and day out. The statements specifically indicate that they don't want any of this to succeed. Number five, he said he needs more data to make a decision and pointed to recent data showing that inflation is closing in on its 2% goal. So we've got inflation coming down. He has talked, he says it very specifically, man, we're 2.3% in the last CPI, but he says it might go back up. Well, sure, anything might happen. Number six, he said that GDP growth was really like 2.5%, not the negative 3 that was reported the other day. When you take out the unusual import data, he acknowledged that, said that was true. All right, so that's good. I like that. He says we will probably see the reverse of that data coming up in the third quarter, which is absolutely true. I'm sorry, the second quarter. He did say that finally, he did say that the underlying inflation is in excellent shape. Underlying inflation is in shape going forward, that all of the major categories like housing, rental, oil, etc., those are all in good shape going forward. He did say that. What he didn't say, and it matters, what he didn't say. Number one, he says that he didn't say that Doge is reducing government spending other than what it otherwise would have been. So in other words, that we don't have an absolute reduction in government spending, but we have by comparison, there is lower spending by Doge. And what the impact of that is, not just on employment, which we mentioned up above, but also what the impact is on the deficit, interest rates, and all the rest of the things we talk about here all the time. And he should have said that. That is another major thing that's going on. It is clear in the data, and it should have been mentioned. And it would be mentioned by somebody that didn't have 100% of his staff being left of center. Number two, that he didn't say that the deficit decreased for the first time in years. That would have been good to say. He didn't say, number three, that the interest expense on the debt decreased for the first time since 2020. These would have all been good things to say because they're really, really important in terms of the overall where the economy is going, how it's going to impact stocks, how it's going to impact everything, how it's going to impact people getting hired and not hired. He never said that tariffs are likely to, and that there's already lots of evidence that they're beginning to increase domestic manufacturing, and that Trump's actions are resulting in massive new development. All kinds of people saying that they're going to come to the United States and build, or American makers that are saying they're going to build new factories. I forget how many trillions of dollars right now that's already come up to, and that stuff is already happening. They're in various stages of either the plan. They have to pay for planners, you have to pay for architects. If you've already got the plans and the architects, you got to buy the land, or maybe you've already bought the land or bought the building that you're going to now change. All those things are already in process. There's already people being hired to do this kind of stuff. Then these are all going to counteract all the stuff that's happening in manufacturing and all these new dollars that are being spent in the United States. Those are all going to counteract any problem with the labor market. Number five, he didn't give us any kind of estimates of the range of how tariffs might impact inflation. He just said, it might impact inflation. Well, wouldn't it have been a good idea to give kind of a range? Multiple sources suggest, as I have suggested for a very long time, that it might impact by 0.8% for the entire year. And that might show up quarter by quarter, 0.2, 0.2, whatever. Okay. But 0.8 over the whole year. And again, it's only a price increase. I've seen the high end of the range. I haven't seen anybody higher than 2.5%. So again, if that's 2.5% over the next 12 months, then you might see 0.6, each month or something like that, that would be impacting the numbers as they come out. So instead of having something that would have been at 2.2 or like last month, 0, you might go from 0 to 0.8 up. You might go from 0.1 up to 1 point, I'm sorry, to 1.8 up, 0.18 up. Okay. Anyway, you know what I'm trying to say here. All right. So he didn't say anything about that. He didn't give us any kind of a range, and he didn't give us any kind of an indication of what the net result might have been, given that kind of a maximum. He did say several times that, we now have these really high numbers, which are probably not going to be the final numbers, which is why we're still uncertain. Well, yeah, okay, but you could give a range. Number 6, he didn't say anything about the potential of the tax bill to stimulate the economy coming up later. Well, the markets are telling us today that some of this is true, even if he didn't tell us that these things were true. All in all, I think he fails to understand the Trump/Bessent plan, the three-legged stool, or he's acting politically in this overall analysis. And I'm not saying that he's political, because I believe that at least when he started in the position, he's considered to be a conservative. But every indication is that 90-something% of the people that work for him, the PhDs, all these PhDs that are supposed to be so brilliant, I'm telling you right now that I'm no PhD in economist. I'm not even an economist. I don't make any claim to be an economist. But I can tell you, I think my analysis was better than his. What do you think? Let me know in the comments below. So, but those analysts, 90-something% of them give to the Democratic Party. So do you think that has any kind of influence on the way that he sees things now today with all of those people? Shouldn't he be hiring people that are more balanced in terms of their outlook? This is from Yahoo Finance. I think this is really, really important. Please hang in there for all of this. The number of Americans filing new applications for unemployment benefits just this morning fell sharply as the spring break related boost from the prior week faded, suggested that labor market continuing to chug along just fine, though risks are mounting from tariffs. Whatever. Why did they even add that? We don't know that. It may be the opposite. The tariffs may be increasing decreasing the number of people being laid off and increasing the number of people that are now working in manufacturing or getting ready to build these plants. Employers are hoarding workers. We know that we've been talking about this for over a year, because they had so much difficulty finding labor during the COVID-19. And because they're hoarding, the good news is those people should be more productive. The better news is that they've trained these people now. They've got solid folks on board. But this could be tougher, as other data from the Labor Department on Thursday show worker productivity dropping for the first time in almost 3 years in the first quarter. But the worker productivity that went down in the first quarter is also impacted by all those incoming those imports. Okay, so productivity, that gives you that added number of inputs coming into versus the number of things being shipped, reduces the total productivity per worker. Low productivity is likely distorted by President Donald Trump's sweeping import duties, which depressed output last quarter. It nonetheless highlighted the economic risk wrought by the ever-shifting trade policy. Pro-cyclical productivity growth, a resilient labor market, and solid household income gains remain critical pillars of U.S. exceptionalism, says Gregory Dacko, chief economist at EY Parthenon. However, he says, the durability of these pillars is being tested. With tariffs increasing the cost of goods sold, the ability of firms to maintain margin discipline without resorting to labor shedding is under pressure. Okay, so in other words, as you see these new higher tariffs coming in, you're looking at the fact that you can't really pass that through. Either the buyer that you're selling to says, I'm not going to pay the higher price, or the consumer ultimately decides, nope, not going to pay that price. I'll buy a substitute, or I'll buy a different brand. The buyers are going to buy from a different country. Maybe you're going to buy from a different country as the importer, or maybe you're going to find a domestic maker. And that's what's happening. A lot of these importers are now going to domestic makers, and this is helping U.S. manufacturing. So you have all these different components going on, but what you're seeing the mainstream press concentrate on is the negative implications of the tariffs and not talking at all about the positive implications of the tariffs. So the real E.J. Antoni, who's a really smart guy, I'll interject in this article, latest productivity numbers show overall decline for Q1, driven down by service sector. So the service sector had lower productivity, but manufacturing improved. The manufacturing sector improved in productivity. This is very good news in this report because inflation-adjusted compensation, which had declined in the previous quarters, rose a full percentage point quarter over quarter. Now, how about that? So now back to the article. Initial claims for state unemployment benefits dropped by 13,000 to seasonally adjusted 228. Does that sound like the average number for like a year? You'd be right. It's around 222, 223 for the year. Economists polled by Reuters had forecast 230, so they missed it. The decline unwound some of the surge from the spring break in the New York State, which had lifted claims to a 2-month high. I don't have a clue what they're talking about. If you know, let me know in the comments below, because I don't get what they're talking about the spring break having anything to do with the unemployment claims. Anyway, filings vaulted 6,900 in Michigan, potentially hitting at layoffs in the automobile industry with regard to the duties. Again, what you're seeing there, I didn't finish up my earlier analysis, which is, okay, I'm an importer. I've got these higher prices now because of tariffs. I take a look at that and I go, I can't pass along that price increase, or that's going to increase. That's a component. It's a piece of this bigger thing that I'm building, and I can't just raise the price of that bigger thing. So that's going to hurt my margins a little bit. Well, what can I do? Could I lay some people off in order to make up that difference? And maybe I'm holding on to those people. Don't really need them. I know I could easily do a 10% layoff, and I'd still be fine. That is good thinking. That's smart thinking, and it could happen. The number of people receiving benefits after an initial week of aid, which is, of course, a proxy for hiring, decreased 29,000. That's a very important one. It decreased also by 29,000. The unemployment rate, as we know, was unchanged in April, 4.2. And the median duration of joblessness increased to 10.4 weeks from 9.8 weeks, with the economy adding 177,000 jobs. So we are starting to see, we've been seeing this for months. It's been, I want to say at least 5 months that it's been harder to find a job once you're laid off. Now, on the other side of the coin, 𝐄𝐦𝐻 says this: U.S. layoffs are skyrocketing. U.S. employers announced 105,000 job cuts in April. That's the highest for any April in 5 years. Excluding 2020, it would be the highest count since 2009 for April, not for any month, but for April. Over the last 6 months, there have been 699,000 job cuts. That's the most since 2020. And the job cuts have been particularly high. All right, you ready for it? Where have those job cuts been coming in? Where are those layoffs happening? Why are they so high? Oh, they've been highest in the government sector. Oh, yeah. Followed by retail and tech. And we know about the tech layoffs, right? Because they are out ahead on these AI layoffs. And that's what I'm seeing the most of. The headlines that I'm seeing is company after company saying we're laying off 10%, 20%, whatever it is, because we're a tech company. We understand AI better than other people. We're already applying it to our company. Even though we might be selling those same things to other companies, we got to apply it to ourselves first. And we're laying off because we're saving money through AI. Okay. Well, how did things end up today? So we will do that now instead of later with Bradford and Ferguson. So we've got Tesla up 3.11 today. It was also just barely down 0.05 in the after hours. You've got the Dow Jones up 0.62, the NASDAQ up 1.07, S&P up 0.58, and as I mentioned, Tesla up 3. You've got all the Magnificent Seven were up. Now, by the way, everybody took a little bit of a shot at the end. So there was this massive uptick when the president announced that they had a deal with the UK. The uptick was also there was a related a conversation from the administration about the China conversation, the China summit that's coming up this weekend. So all of that caused the markets to really, really go up strongly. A lot of that came off at the very end of the day, and there was no real reason for it. I'm going to say it was profit taking. I don't know, but that's what I'm going to go with. Nobody knows for sure. Anyway, then we've got the Cathie Woods also 100% up. Let's go ahead and look at the bonds, which were okay. So now we're gonna here's what here you want something that's uncertainty. You want something a little bit confusing. Okay, let's talk. Let's take a look at this. We've got um, this confusion by our Fed, right? The Fed's like, I don't know what's going on. I can't figure it out. It's all confusing. I don't know what to do. Okay. Well, then we've got the bond market, though, that during regular trading today, they apparently thought that they know what to do because it looked at them like business is perking up. Okay. So we have a massive increase over 11 basis points during the regular trading today. So now we're back to 4.38. We were almost down to 4.25. Now we've jumped way back up to 4.38. There's only one reason for that, because the auction went really, really well yesterday. It was yesterday, the day before. I might have lost a day this week because of travel. Anyway, but yet the auction went well. So I don't think this has anything to do with the real tension that happens right now with regard to the amount of bonds that are available. I'm saying the only reason this went up and it went up at the same time is because what we heard this morning sounded like something good for business. Okay. And so it went up back to 4.38. Now, let's go ahead back to the 2 month, back to 4.31. That's really high. And the 2 year up to 3.88. That's actually pretty good. All right, let's go ahead to oil. Oil went back up also. Again, this would be an indication that those playing in the oil market think that oil is going to do good. All right. That means that economy is going to do better because China and US are talking, because UK made the deal. So up $2 during regular hours, up another 29 cents in the after or the pre-market, sitting at $60.20, back over $60. Natural gas also up 0.84 at $3.62. Gold fell off just off a cliff earlier today, back down to just over 33. Ended the regular trading at 33.06 and up 8.30 in the after hours or the pre-market. Silver also fell during regular trading, is back up a little bit, sitting at 32.62, and copper is now sitting at $4 and call it 60 cents. Again, very, very close to where it's been for a while now. The dollar right now it's rudderless. It says that the dollar and the sterling are both up as a result of the deal that was made today. Bitcoin, now here's okay, the storehouse of value, right? Is it really a storehouse of value, or is it really a future indication of risk on? Some people think it's an indication of how risk on is happening, and everything about today would suggest risk on behavior. In fact, there was headlines to that effect. Well, Bitcoin went up 6,000 today, 6.62%, sitting at 102, first time over 100,000 in, I want to say, months. So, okay, you tell me. Okay, and we've got the pre-market. So the pre-market, right? I mean, the pre-market on equities now. So we've got the Dow barely, okay, call it unchanged, S&P unchanged. In fact, all three just 0.01, 0.02, anyway, it's all unchanged, all moving around the zero spot. So not a lot of action in terms of guests for tomorrow, except after that big run up, and then also the down, the big slide at the very end. That slide didn't continue into the pre-market. What you're seeing is what would look like more of like, okay, we've done what we're going to do with the information we have, and we'll have to see what happens overnight if there's any news that would change any of that. Okay, so that's all we have right now for you. Please check out Cern Basher's video last night. Cern's the first part of his bio. Everybody loved it. It's got huge numbers. Maybe you haven't seen it yet. That bio will continue tomorrow night. On Friday night is when we'll do the part two, and then on part three will be sometime on Saturday. Later on tonight, you'll have Jeff Lutz at roughly 5 o'clock. No, not Jeff Lutz. I'm sorry. Jeff Lutz is off this week because I was traveling. We've got Bradford Ferguson on tonight at 5 o'clock, roughly. And then after that will be Cern Basher with his regular program at 7:45 tonight. Okay, hit like, subscribe, notify, all that jazz. I think that's 100% of what I can tell you right now. It's been great talking to you.